Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host Ron LeGrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
This is Ron LeGrand again with another issue of the Mentor Podcast. I got with me today Mark Khuri, who's got so many credentials. I had to ask him exactly what we were going to talk about today because we could be busy for 2 weeks talking about commercial property, which was his specialty. Mark, I'm going to let you tell them what we're going to discuss today and who are you?
Sure. Yeah. Thanks for having me on, Ron. I'll keep it short to get to the questions, but been a avid real estate investor for 20 plus years now. Started out in single family, small multifamily, a lot of fix and flips, heavy rehabs. Did that through, 2005 to 2010. I was working in finance at the time. And so that was, after work, go to Home Depot, go to the properties, fix them up, that kind of thing. By 2010, I was hooked and left the W-2, opened up our firm, SMK Capital Management. Today, we really focus on private equity real estate, really in more of a diversified approach, Ron, into commercial real estate sectors. And so we raise capital from our investor network. We partner with different sponsors and operating partners that we have relationships with in different niche sectors that we want to spread our capital into. And so we invest in mobile homes and self-storage and triple net industrial, also doing some tax exempt apartments and private real estate debt as well. And so it's a bit different than where we started, but we find the risk to be lower and the returns to be very attractive in this space as well.
All right. I think probably the best place for us to start today, Mark, is cater to our folks listening, which is probably most of them that don't really know anything about commercial real estate, but more importantly, how to get started in the business if I have no experience in it prior to talking to us.
Yeah, sure. I think there's a couple ways to think about that, Ron. So, first I'll just compare residential versus commercial, because we've done both for many years. Today, our focus is commercial, but a big part of why we pivoted from residential to commercial is, historically, a lot of single family homes have been correlated to the economy. Not always, but there is that risk where if the economy is not doing great, then the value of your house can go down, right? Whereas commercial real estate, generally speaking, is valuated based on a business, right? Like a business. How much income does it produce? And then there's a multiple to that, and that's essentially the value of the real estate. And so those are just some things on how to look at value and what can affect them. There's a lot of different variables, but commercial historically just tends to be a little bit more insulated and lower risk during different market cycles. And how to get started, Ron? Great question. If you're thinking about getting started as an investor, which is how we got started, myself personally, about 13, 14 years ago in the commercial space, I was looking for diversification through my retirement account. The stock market was troubling, to say the least. And so I started investing as a limited partner in a bunch of different deals, right? I saw mobile home parks. I got attracted to them for their resilience through the 2008 and 9 downturn, and was introduced to some operating partners with a strong track record from another investor of ours. And so, LP is usually the easiest way to get in. You are passive. You don't have to sign on the debt. Usually the minimum is, around 50K, give or take, depending on the sponsor. You can invest through your retirement account and have exposure to different asset classes that you otherwise may not, want to go out and buy a mobile home park and learn how to operate it and do all the nuts and bolts. And so working with a team is a great way to get in. And that same concept applies around to, other asset classes and real estate sectors as well. If you're thinking about starting as a sponsor and operating partner, where you're going to essentially be the general partner and run the ship, I mean, I always say start with raising capital from friends and family that know, like, and trust you already, and get out there and hit the ground running. Right, find a first property that hopefully isn't too expensive, and you can start building a track record if that's really what your prerogative is, and you want to be in the operations and general partnership seat. If you haven't done that before, start small and try and build mentors and a team around you that you can maybe even bring onto your general partnership for the first couple deals and have them help you, because there's a lot out there that you just won't know. Doesn't matter how many books you read. Experience is the most valuable lesson, in my opinion. Um, and so the other way I'd say is, raising capital is another opportunity. There's fund to funds. We could talk more about that, Ron, but essentially where you're partnering with the GP and your job is predominantly to do a little bit of vetting and underwriting and making sure that you feel comfortable with the deal, then also running a fund of funds where you can open your own entity, raise capital into it, and then your entity would then fund into the deal. And so there's a few ways to do it. Those are probably a good point to start at this point.
All right, so, what if I don't have good credit and my funds are limited? Well,
Yeah, OPM, right, Ron? Other people's money. So you don't need credit if you're not going to be the general partner, because the general partner is typically the people or the group that are working with the lender, signing any recourse guarantees if there are any, getting credit checked. They look at your balance sheet, that kind of stuff. And so if you don't have great credit or track record, then you'll want to likely, again, maybe you can start all real small, buy all cash. Maybe you don't even need financing. That's one option. Or, partnering with others, but in a different capacity other than general partner, where you would be liable for the debt.
yeah, in other words, you can have other people put up the money and the credit if you need either. I try to structure financing where I don't need to go to the bank to borrow money to do stuff. I love land. They just simply buy it with owner financing and get it rezoned, and I'll get the value increased and put it on the market and sell it. I did 4 or 5 of those this past year. Don't touch them. Nobody's gonna call you to fix your toilets or whatever. That's about as easy a deal as you can get. And then, of course, I like the land that you are actually better suited for developing. I've done several of those. Back in '08, I had 5 single-family developments already horizontally done and ready to go vertical on them. And you know what happened in September of '08. So everything stopped. So I've been doing commercial a good part of my life, but I know that I got a lot of people watching us right now that just is not doing it. Don't even really know they want to do it. They don't know what it is yet, and you think I'm not qualified because I don't have the money. I can't go to the bank and borrow $20 million and that kind of stuff. So
Sure.
my goal here today is to try to let them know that they can do it if they want to do it. But first, they got to get some education to know what it is and how to get started. What was your first deal?
Say the last question again,
What
Ron.
was your first commercial deal?
Our first commercial deal was, well, as a limited partner in, again, 2012. I was personally looking to diversify my retirement holdings out of the stock market. And so I networked for about 2 years, Ron. Back then there wasn't much online. And so you had to go in person and shake hands and listen to speakers, which I still love to do today. It's actually very valuable. But there's also a slew of information online. But so I networked my tail off and learned a bunch on the asset classes, the sectors, and some of the ways they're evaluated. How do you know if you're paying too much, and how do you know if you're not getting a good deal, and are you sure you can raise the rents, and how, and this kind of stuff, and really trying to understand the business plan. And just went in and made our first investment. It was in a mobile home park fund that owned multiple properties in multiple regions and states. Was already producing, I think at the time, 10% cash flow to investors, which is next to near impossible to find today. But back then, it was a relatively easy step in because you're getting nice income starting in the first quarter. So that was one of the first, and then the next one was into self-storage, very similar, a smaller fund. It had, I think, a half a dozen properties in it in 2 states. And so We like funds, Ron, where there's multiple properties in them because you can lower your risk, right? God forbid something happens to one of them, the others can hopefully offset it or even do better. And there's a lot of unknowns in this business, as you know. There's storm risk. That's something we pay a lot of attention to these days, especially in southeast, where there's just more frequent and bigger storms. And so even if you got the best people and the best property and the best location, it's doing great. There's still risk that fires, we've had multiple fires at properties over the years. This stuff happens. You just got to be ready for it.
Yeah, we have insurance problems down here in Florida, doubling and tripling, not just on single family houses. On some commercial properties, they just are ridiculous. And, you can't spend enough money to insure them. For whatever reason, the wind blows away houses down here now and then, but, where I live in Jacksonville, we haven't had a hurricane since 1964. But we're still paying the price for the rest of the state. But people think of hurricane, you think of Florida.
Sure.
So, I've been, in several of these, like funds, as you call them myself, for multiple types of commercial property. I totally agree with you on that one. I don't like putting all the eggs in one basket. And of course, there's income producing and then there's not income producing, properties. Both have their pluses and their minuses. So probably the best thing that you would suggest that people do is partner up, or at least hang around somebody that really knows their business and provide something to them. I'm thinking of my personal assistant's fiance. He and I did a project in Illinois in 2005, I think. And that project had to go back to the bank. There was no hope for it, and it wasn't that the money dried up; it was the exit strategies that totally dried up, as you well know. He went out and worked for a guy that is in the commercial business. I learned how to analyze them and spreadsheet them and that kind of thing. Spent 10 years doing that, and then he looked for a project up in Massachusetts in that big old ugly building. Turned it into a very beautiful life storage center, and just sold it last year. It had about 6 million in it and 19,500,000 out of it. And literally it took him 2 years to become a multi-millionaire. And here's the point. The point is he used his money. We had a partner put up the down, the partner will get the loan. Of course, the partner got a great big old bunch of money for doing nothing as well. I mean, the return is ridiculous. So when you don't have whatever you need, you go get somebody else's habit, and you bring the deal to the table. So if people think this is well, it is a little complicated business. I've got to admit, I've done over 3,000 houses, and commercial is a lot more complicated than houses. Both have the pros and cons. But first you start by learning the inside language and how you can. First thing I teach is I got 14 different ways to buy commercial property without using your money. So plenty of opportunity. Okay, so what are you trying to do in the future here? What are you looking to do? You got a big goal?
I mean, yeah, Ron, our focus today, we always look at the market. Where are we? Where have we been? And then, where do we think we're going? Nobody knows, right? But there's a lot of I say in real estate business, there's a lot of inside information, right? You got tons of data out there that's public, some of it's private, some of you got to pay for, but there's a lot of information you can gather on trends. And commercial real estate typically moves, like a slow, big cargo ship. It's really hard to steer it left and right. It doesn't move as quick as much else out there. It could take quarters or years for you to see trends start to move positively or sometimes even negatively as well. And so I like that personally. It makes it a little bit less volatile than the stock market and the economy and certain other areas. And so our focus today is on the asset classes that we believe are really well positioned for the next 5 years or so. And what I mean by that is there's a lot of favorable trends as to timing. Again, we're not trying to time the market, but we do know that pricing in certain asset classes has dropped, 15 to 30% from 2021, 2022 peaks. And we haven't seen that kind of price decline, since 2008, right, Ron? And so
Yeah.
20, 30% off, I'm all ears. And so that's kind of where we're looking at certain sectors that we think have a really good buying opportunity where you can get them at a very attractive basis and still cash flow day one, have a business plan to grow the value, and then sell them hopefully in, 5 years or so, um, at the time where maybe the market's doing a little bit better, right? There's a lot of uncertainty out there. And so another way we risk mitigate against the current market is we combine these different assets and different property types into one fund so that, again, we're diversifying, reducing our risk, and really reaping the benefits of each individual deal within the fund.
What do you think is the top producing asset class today?
Number one, huh? I would say it's I'm going to say there's two in the first position. And so I'll start out with mobile home parks. We love them, always have, probably always will. We'll see, but much harder to find great deals today. So that's one of the big variables. And there's a lot of, as we work with sponsors and operating partners, there's a lot of younger groups out there that have only been in the business for, 3 to 5 years. And so we really like to find folks and groups that are very well experienced, have been doing it for a long time, call it 10 plus years, Ron, some of them even longer than we've been in the business, and that you can trust. And that if the weather's going to get bad and ugly, they're going to pivot and adjust their business model and strategy to be able to continue to do well. And so that concept, in general, is what we look for with people that we're partnering and investing with. At the same time, another asset class is triple net industrial sale leaseback, which is a mouthful, and I can share with you what it is, but we find it to be inflation resistant, a very long-term stable asset, produces income beginning in year one, and has seen, significant cap rate expansion over the last few years, making it a really opportune time to get in.
Again, what is your top favorite out of all of them?
Top, we'll go with mobile home parks.
Mobile home park?
Yeah.
This so happens, we're looking for them too. And you're hard to find if they're worth buying, you're absolutely right. And folks, we're looking for from our properties that have a problem.
Yep.
So we can fix the problem and build in the equity right now instead of going out and buying at retail like most of your funds are doing. And starting at retail prices, better hope it goes up. So problems like vacancy, problems like needing renovated, problems like owners can't get along, whatever we can find that'll deteriorate the value as in its current as its position. So this game is not all that complicated. Buy it with something wrong, fix it, go refinance it, non-recourse, and or sell it, or both. That's really all there is to it. It's that simple, huh? I know it's not.
That's good.
Not quite that simple, no. I get it.
Yep.
But I go back to my friend Mark. In one deal, he set for life. His children, if he has any, will be set for life. And that's just the one deal, and he's already working on other deals. So you don't take too many in the commercial world. Now, I love houses, but I was raised on doing, and that's what I'm expert at. But I would yield that it takes a whole lot more houses than it does one decent commercial project to create your retirement. And our listeners should know that all of this can be done tax-free if you just get a little information. You don't have to pay taxes on the sale of real estate if you're educated about how not to do it with the IRS's blessing. Anyway. All right. If you had to start all over again, Mark, what would you do different, knowing now what you know back then?
I think I would have started earlier, even though I got my start in my, mid-20s. Gosh, I would have started investing early. How about that, Ron? Right? Like, as soon as you get a good chunk of money, it doesn't even have to be that much these days, right? But you get a little bit, couple $1,000, put it to work, right? Forget the nice car and the toys when you're young. Try and find OPM, other people's money, like you're saying, Ron. Like, I think about my kids. We've got two, 7 and 8 years old, so they're still young. But what I might want to do with them, we'll see, Ron, where it goes. But hopefully when they're, 15, 16, we'll see what age that they're mentally capable of managing something. We're going to go on a house hunting spree. And I'll be their money, their OPM, right? We're going to analyze the heck out a bunch of houses, start with, 3 bed, 2 bath, single family home. I'll be the financing for them, but they got to run it, right? They got to manage it day in and day out, and manage the property manager if it's not local, that kind of thing, and start doing that at a young age. I think they'll be
I
hooked.
find one fault with that, Mark.
Yeah.
Yes, I don't think you should be providing money.
Say again.
If you're gonna train them, get them out there in the real world, if everybody doesn't have a sugar daddy. Teach them how to get private money from private lenders without, putting a credit at risk.
Sure, that's a great idea.
Yeah.
I'm looking for an ROI here, Ron. That's why I'm doing it. No, I'm just kidding.
Well, I told all of my kids that the only reason I had them was to take care of me when I'm old and work cheap when I'm young.
That's great. There you
The
go.
work cheap part, I don't know about that old part.
Yeah.
Okay, I got 9 grandkids and 14 greats.
Oh, God bless you. Wow.
You can't help but learn something from all of that mess. Listen, where you got a place that people, you got something you can get people to get started, see if they want to start in real estate or not. What do you call it? What you can do?
Yeah, we put together just a really, I would say, comprehensive ebook. The title is Navigating Passive Real Estate Investments,
Mhm.
5 Steps to Best Position Your Capital. And so we go through some, a couple important points here that anyone at anyone's level, beginner, intermediate, expert, there's a lot of interesting tips that we've compartmentalized after being in the space for, 15 plus years that can help people just as a reminder of, what to look for in people, and diversification across asset types, different types of demographic trends when you're picking a location, right? Geography, cities, municipalities, and then a little bit on deal analysis and underwriting. And so that to me is a great series of data points and steps for people to follow that they can really learn in a short period of time. And you
All
can,
right, and guys,
yeah,
you can get that at thementorpodcast.com for free. And it'll be up there by the time you get to hearing this. I don't know, I'm sure you can just go on there and it'll tell you. Just hit a button and you can get the book. Also, if you are not familiar with me, go to ronaldgrand.com. And if you want to learn how I make money with terms, not just with ugly houses, go to ronaldgrand.com/term. And or you can spend your next 5 years on YouTube. That's how many videos I got on there. Of course, they're free. We're not, either one of us, I'm not hard to find. So grab all that free stuff you can, but in my opinion, until you make the commitment that you're actually going to get the training from somebody qualified to give it to you, you're not really starting any business yet. So make up your mind if you want to do it or you don't do it, and that's what all this free stuff is about. You got some stuff on commercial there as well, and plenty for you to do. So, Mark, have you got any parting words for our audience that will keep them awake at night? It was so cool, they've never anything like it before.
Yeah, I would just say there's always risk out there, even when you think you got it all figured out. Just remember that even the smartest and best money managers in the world lose money and make mistakes because there's things out there they don't see coming. And so, with that, this is not a fear, don't do this kind of point I'm trying to make. The point I'm trying to make is, find one area that you really want to hone in on that you think is a good fit for you, your lifestyle, what you're trying to achieve. There's so many different things you can do in this industry and space out there. And so figure out what it is that gets you excited and that you think's within reach. Start there, right? And go become an expert in that one thing. Find people around you that can help you, that have been doing it for much longer than you, and lean into them. See how you can help them first, and then you'll see where things go. But get started. It's never too late. Now is actually, in our opinion, a really good time. We're in a really interesting part of the market cycle, and there's a lot of opportunity ahead.
It's always a good time to enter any kind of real estate, frankly. long as you understand what you're trying to accomplish and you're going with the flow and you're not 10 years behind. So, all right. I appreciate you taking the time to spend with us.
Yeah. Thanks for having me, Ron. Appreciate it.
My pleasure. I'll see you next time.
Talk soon.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.